I'm going to show you how to never blow up your trading account. I've been trading for over 8 years and I've been interviewing traders for the past 5 years, and I know what is an account destroyer. And today I'm going to dive deep and I'm going to show you how to identify it and how to avoid it. So that way you as a new trader don't start the game not knowing this information and end up blowing up way too soon. So first off, a lot of people are talking on social media about how can they avoid this next time, how they blew up an account after trading for many years and so forth. And so today I really want to dive deep and show you how to avoid this disaster. This is a stock that ran from $10 all the way to $107 and then came all the way back down to $134. So if you were someone who was buying the stock in the 100s and the 90s, you are down dramatically. And this is why we call it an account destroyer. And if you're somebody who is shorting a stock, meaning you are selling high in hopes that it crashes so you can make money, well, this is also even worse than an account destroyer because now you might owe the broker money. And let me explain. For example, if you shorted, let's just say 1,000 shares at $12, or let's just even go lower than that, 100 shares at $12. That's 1,200, right? That's how much you need it to short this stock. And if this squeezed to $107, that would be a $95 push. So $95 times $100 is $9,500. That means you would immediately be down $9,500. And you only put $1,200 into this play. Do you see what could happen to you? Especially if you have a small account. You can easily blow up your account and you owe your broker money. Now that's if you shorted this play. Now, if you're someone who bought it on this run up thinking it can go higher, it's about to break 100 and it's going to go, or you buy it at 90 or you buy it at 80 and you feel good because it hit 100, but you hold, moments later you're down, and the next day you're down to $2. And then it reaches even a low of $1.34. So you lose pretty much all of your gains, and you won't owe the broker money, which is good because you bought it and you didn't short it, but you blow up your account and you take yourself out of the game before you even get started in the game, start learning how to trade. Now, first off, if you're wondering, how do I know that this is an account destroyer beforehand? No one knows anything up front. No one knows for a fact that this could destroy your account, but there are some signals that give you edge in terms of probability to make sure you avoid the chances of joining an account destroyer. And I'm going to talk about this on both the long side if you're buying stocks and the short side if you are shorting stocks. So this will be good for new traders to more advanced and intermediate traders. Now I'm going to break this down on both sides. And let's start off with the long side. That is the easier side to understand, and it's more for the beginner trader because I know most of you guys are buying stocks low and trying to sell high to make your profit, which is longing stocks. So if we go ahead and start on this day, which is the day of the run up, let's go ahead and zoom in here and go to a lower time frame. Look how abnormal, and it even reached 200s, by the way. So just look how abnormal this run is. But before it happens, you'll see if you're long bias, first off, pre-market, there's no volume at all. This thing had 15,000 shares, then 16,000 shares, and we'll give it, let's say, a ballpark of 40,000 shares being traded pre-market. That's your first warning sign, okay? There's no volume. What does that mean? What that means is anybody with a large enough account can move this stock. Why? Because there's no one trading it. So if you buy a lot of shares, you can move this stock. Now, I also want to find out what the float is, and I use Ask Edgar to find out the float. You can check out the links in the description to get a discount code to check them out. But just FYI, Ask Edgar, you can use a lot of free sites, FinViz, Yahoo Finance, but the float is 6 million shares. Now, when the float's that small, that just means, for those who are new, it just means visualize. Let's just say the market cap on the stock is 55 million shares, right? Or outstanding shares is 55 million. Let's just say that, okay? Just for sake of argument. But the float is 6 million. Well, what is publicly traded, meaning you and I can trade, is the 6 million. So it's a very small portion, right, that is available to trade, which means if you're somebody who has a $1 million account or has a big account enough, you can completely control this stock, and it may not be advantageous to you, but you can definitely control and manipulate the stock with that amount of money in your account, because you could buy 6 million shares if you wanted to, which is the entire float, and lock it up. But let me explain something. When a stock has no volume and it's low float, it shouldn't even be on your radar. When you're a new trader, you should be looking for stocks with momentum, stocks with a lot of volume, because then you can get in and out of that stock and you can build a system that you can scale into. You can't scale into a system with a stock that's trading 40,000 shares. You just can't, because you're going to hit right away a ceiling, because eventually you will be buying 10,000 shares. And if you are buying 10,000 shares, a quarter of the volume for that day, you will drastically ruin your chances of success. Because if you can move the stock, then it's not a good idea, because when you sell, you're going to hurt yourself during the selling pressure, right? If you own that much of the stock. We cover a lot of information on trading here on Be the Trader, but none is more important than the broker you choose to execute your trades. There are many reasons I use Cobra Trading every day, including multiple order routes where I can get fast execution, great availability on locates for hard to borrow stocks, and fantastic customer service. But don't just take my word for it. Both Benzinga and Forbes Advisor have awarded Cobra for best in class for short selling and day trading. Isn't it time you choose a great broker that you'll enjoy working with? Sign up now by using the link below, and Cobra will provide you with free software for an entire month, plus 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show. Now, on top of that, when you see a stock shoot up from 13 to 23, and this is a 2-minute candle, 13 to 23, it jumps up $10 a share. If you are buying up here, first off, you need to either A, be risking down here, the 12 where it initially started, so that way you have to risk very wide. But I promise you, most traders who are new and who are just focused on the wrong thing, money, right? They're focused on money. They're going to buy up here 21, 20, they might even get a good price, right? 19. And they're going to risk right here, 17, 19, right? They're going to risk that low, and they're going to get a tight risk reward. And they're like, yes, I'm going to make a lot of money if it squeezes. And in this case, it does pay in their favor, right? It goes straight up to 218. Now, before it does that, you'll notice, look at the time difference down here. It halts right after the open, 18 minutes after the open. Now, why does it do that? Because there's nobody trading this, and there's no volume, and it's a low float. So when all this volume comes in out of nowhere, right? Out of nowhere, it creates a volatility halt, and it just freezes a stock. Now, because this is also a Chinese company, which if you haven't been trading for a long time, you may not be aware of this. And that's why I'm hoping you watch this video. But we know that Chinese companies in the US stock market mostly can be called a scam. Now, you don't have to believe me, but I know this from years of experience, and a lot of traders talk about this all over social media, so go check it out yourself. But you'll see that these kind of stocks can go ridiculously crazy and then dump on you. Now, first off, reviewing real quick, float has a low float, no volume, and it immediately just skyrockets. So you don't want to just chase. And if you're buying up here at 19, that's already the wrong problem, because what's going to happen, the guy who buys right here at 19 thinking he's a badass, risking this tight risk, isn't aware of what kind of dangerous position he has put himself in. Now, when it halts, he's probably freaking out. And this halts all day, because the next time it moves and opens, it's right at the close. And when it opens right here at 107, and we get a squeeze of 218. Now, if you were able to get out and you got a 19, that's amazing, right? But let me tell you what also happens. There's a lot of traders who end up buying this thinking this could go way higher. This thing is going to the moon. And when they buy and they try to be cute and try to risk tight, like I'm going to buy at 70 because it dipped from 218, right? That's a huge dip. I could just risk maybe, 60, maybe 50, or maybe they get cute and they buy at 40. And they're thinking that's the lowest that it's ever been so far. This candle's about to close, and they're looking at the time. It's a 2-minute candle, and they're seeing that the time is about to hit 2 minutes. It's going to close and hold 40. I'm going to buy at 40 because, look, we just came down from 220. And I'm going to risk below 40. And maybe they're even a little conservative. They're trying to be a little conservative. They're risking 35 or even 30. If we go into the next candle, we get a big drop straight to 20. So number one, you get massive slippage and you're already down dramatically half of your position because you buy at 40, now you're at 20. Now that's insane right there. But if that's not enough, if we go to the next candle, it just goes even further. So if you're someone who doesn't stick to a plan that you even had, even though it's a bad plan to begin with, now you're down even more. And then if we go further and we just keep going, you'll see this thing just fails and continues lower and goes all the way down to 10. And if we go any further, Now we're in the ones. So if you're someone who's like, oh, it has to come back. It literally came down from 218. I was told if something went ridiculously high and it pulls back, it has to at least come back somewhere. We have to have some type of a bounce, right? Buy the pullback. How often do you hear that? Buy the pullback. But if you buy the pullback on any stock and you don't understand the stock market, you will put yourself in harm's way. And if you don't stick to a plan, you will put yourself in a situation where you could be down literally 100% on your position. That's pretty much what this is. So if you're long, how do you know that this could be a sketchy play and maybe you should avoid it? If there's no volume being traded, it's a low float, and it's a Chinese company, you might just want to avoid it completely because you can't really calculate your risk. This thing is moving so fast that you will be down half of your position in a second. And I mean that. And when that happens, if you're not new at trading, you will feel like a deer in the headlights. You will freeze. And if you don't stick to a plan, you will then say, I will get out when I get to break even. And let me tell you, it will not come back and you're going to be down 90%. So any stock that just shoots up double in 1 minute or 2 minutes in this case, you don't just want to chase. So that's the other thing. You don't just want to chase anything. You want to wait for actual structure to be formed and a nice pullback from when it started. Now, if you're a more advanced trader, then you will obviously have a different strategy and you'll know different ways of trading that type of play. But you'll also avoid these type of plays to the long side because you know how sketchy they are. Now, if you're a brand new short seller, because I really want to focus on the short side, this is the part where you can literally destroy your account and you can owe your broker money. Now, how you avoid this is similar to what we were talking about. When a stock has a low float, has no volume, and sure, it went up to 20 from $10, right? So it doubled. Don't want to just short anything that's just up. Oh, it's up double. It's up 100%. It's up 50%. I'm just going to short. No, if you do that to plays that have low volume, that have no one trading it but you, and it's a small float so anyone can manipulate it and just squeeze you, which in this case happens, and it's a Chinese company, which we know in history can do that and most likely will, you will blow up your entire account. Because even if it did have volume, this thing is not a short. Look at it. This is bullish. Even though the volume's not great, we still have volume bigger than prior hours, and we just push straight up. Why are you shorting that? We have no structures showing you should short other than it's up too much. It can't go higher. That will blow you up. So I hope you avoided that because it will destroy you. Because what happens next is it just squeezes to 200 as we discussed. So that means you would be down and owe the broker money. That's right. You would owe the broker money. So the way you avoid this too is even if you miss the idea that it's a low flow, it's a Chinese company, there's no volume, right? You should still not be trading it short because look at this structure. We built structure right here. After a big push, there's no indication that we are reversing right now, right? There's nothing. If anything, it's all a bullish trend. The old saying, the trend is your friend, is something you need to memorize because it will protect you. Because in this case, if we zoom in again to this area, the trend is we are bullish. We consolidate it. After breaking out here, push, consolidate, push, consolidate. There's no reason to short. So even if you forget, this is a low float. This is a Chinese company. There's no volume. And you take out the whole idea of, oh, it's up too much, it must come down. And sure, most small caps do fail. Most small caps do come back down where they came from. But you don't know how long it will take. And if you're stuck in this, you can blow up. I know many friends who were possibly in a situation where they could blow up. Luckily, they got out. But at the same time, some did not. And it will ruin your account, your confidence, take you out of this game. And I don't want that to happen. So even if you forget low float, no volume, and it's Chinese company, you at least know, look at the structure. It's showing bullish signs. I should not be short. And if you happen to go long because you forget the other stuff, well, at least you only lose what you put in. But if you go short, you can lose more and owe the broker money. As we mentioned, if you shorted 100 shares anywhere in this 20 and you had to cover when it hit $200, which if you're saying to yourself, I wouldn't cover, I would just wait for it to come back down because they always come back. There are a lot of times that your broker will see that you are down negative in your position and they know since you have a small account, you can't afford to cover that position. They will liquidate you and charge you for that difference. So know that. So I'm showing you all of this because I've seen these happen again and again, and they happen often enough for me to make a video on this now, because so many people are not listening and they are blowing themselves up, putting themselves in harm's way. So please be careful out there. Trading is not easy. It is very difficult, and you need to take your time when approaching this game. And if you want something that's laid out in a course format with hours and hours of video lessons and live trading with live commentary, with showing you the positions, the plan before and after and during the trade, you need to check out my system called the Pop Trading System. There's a link below. And just for watching this video, you will get a promo code to help you save some money. Thanks.